Hi guys. Well, it is now clear that February was the absolute peak of the market and all indicators are pointing to a major slowdown. Prices have continued to adjust to higher borrowing costs, and recently TD released a study that indicates that the average 5-year fixed rate has increased by 140 basis points just this year alone. And what that translates to is for the average home buyer, their affordability has now decreased by 12%. But it's not a fire sale out there. You know, the media is starting to scare some people. It's really not as bad as it sounds. Some areas or buildings in Toronto are down 1 or 2%, and some are down more like 4 or 5% this year. It's not 10, 15, 20% slides. The 905, that's a different story. I've seen neighborhoods in Mississauga and in Oshawa that actually are down 10 or 20% already this year from the peaks of February, but that's not the case in Toronto. The sales were down 25% in April versus March. You know, that's true, but that could be a number of factors. That could be, part of it is because buyers are now priced out because of the higher interest rates, but at the same time, it's also sellers haven't adjusted to lower prices yet. So they're still trying to get those February prices, so they're not selling their homes, which, means that their sales aren't happening, therefore sales are lower in April than they were in March. At the same time, the sales to new listing ratio was 49% at the end of April. That means that roughly 49% of the homes listed sell within that 1 month period. If we look at January through March, that same ratio was between 60 and 72%. So clearly the market is slowing down a little bit, but it's not all doom and gloom. And in my opinion, this is more of a blip in the market than anything. The fundamentals are still there. Yes, interest rates are higher. We're seeing 5-year fixed rates now between 4 and 4.25%. Which is high versus the last 4 or 5 years, but historically speaking, that's a very low interest rate still. At the same time, the buyers who have moved to the sidelines, I don't think they're on the sidelines forever. There are a lot of those people, and they're clients of mine too, and friends of ours as well, that are now just trying to gauge the market and see how things played out. So they moved to the sidelines for a little bit. But immigration levels are still picking up across Canada, across the GTA and Toronto, and we have the supply issue, which we've always had. And with the massive shortage of new construction happening right now, as well as a much slower pace of sales, we are going to continue to see a supply issue. And so when these buyers decide to return to the market, I believe there'll be some pent-up demand. So again, in my opinion, I think the next few months of the market will be quite telling. I think it will be a slow 3 or 4 or 5 months. But come September, October, barring a major global recession, I believe the market will rebound at that point. I'm not expecting, going forward in 2023 and 2024, continued 10%, 20% year-over-year price growth. But I do think we'll get back to, a competitive market, which will be back into a seller's market in September and October. But we'll see how things play out. That's just my prediction. And of course, over the next few months, I'll continue to keep you posted. If you have any questions, as always, feel free to call me. There's a link in the comments down here that you can schedule a call with me. And I hope to hear from you. Thank you very much and have a great day.